Hi friends, welcome. This is banking domain training session number 2. In our previous session, we have seen what are the basics of banking, how they make money, and what are the types of core banking systems available in the market. Now let us see the second session. This is my quick recap on the previous video. What are the basic functions of banking, like taking deposit, giving loans, and for the current account, savings account, where you do a daily transaction, and for the loans they give a personal loan and home loan and that corporate loans and accepting the payments, making the closure, and giving the credit card, debit card, and these are the things we have seen. And another thing is from account to account transfer and another bank transfer and everything they do. And how they make money also we have seen, like they take the deposit from the customer for the low interest, and same money they use it for lending with the higher interest rate. So the difference interest rate is what they make money, and bank has to make like at least 80% of the deposit has to be converted to a loan. Then only they can have a successful bank. And on top of it, they make money by doing charges, like processing charges and payment charges at the branches, and so many other charges they do. And that is basically to cover the expenses. And we have seen the types of banks as well, like cooperative bank, cooperative bank, and investment bank, like that. And we have seen the banking operating structure, like back office, technology team is there, business team is there, and what is the role of each team, and governance team also there, audit team, how they perform. And after that, we have seen banking application structure, like core banking will be there, card operation system, card system will be there separately, and on top of it, you will have a loan system separately, treasury, payment, all those systems may be separate. So that also we have seen in detail. And we have seen how the core banking has evolved from the beginning, like in-house software, and then it moved to vendor software, and now it's cloud-based operating system. So all those things we have seen. And in the core banking, we have seen multiple stages during the day. Transaction input, where regular transaction happens, and during the EOD we have end of transaction input, end of financial input, end of day, and beginning of day, and then again coming back to transaction stage. So all those things we have seen. If you have not seen it, please see the link from the down, and then you can see it. Now let us go to the current session. In this session, we will cover what is the common setup. In the common setup, we will have a bank and branch setup. So where each bank will go. Let us talk about vendor software, which is dedicated for only particular bank. In that, we have to define you know where the bank is located, what will be the local currency and everything. And bank is like only one maintenance, like single record. Underneath, you will have multiple branches. Bank can have multiple branches across multiple cities, multiple states, and everything. So each branch you will have a separate address, like IFSC code for India, and international level you may have different big codes for each branches to identify where exactly that is located, and when you are holding an account, under which branch it has been held, and which account is serving the services for that particular account. And the next thing is currency and exchange rates. When it comes to currency and exchange rate, bank not necessary to have all the currencies maintained in the bank. They may operate only for 30, 40 currencies. In a real world, you have more than 100, you may have more than 100 currencies, but yeah, a bank may deal only with 30 currencies. So for that, they will have a standard buying rate, exchange rate, buying rate, sell rate, and mid rate, everything they will have. So you can go into the detail in the another session. In this, we will see at high level, what is that, and then next, what are the exchange rates for each currencies? As I said, like buy rate, sell rate for each currencies, and after that, in case if any other currency comes, I may not have a direct pair through currency, like take for India case, India to USD I have maintained, but I have not maintained AED to INR, UAE dirham to INR. But UAE to INR, I may have through currency, like when I transferring money from INR to AED, first it will be converted to USD and then it will be converted to AED. Like that, exchange rates can be maintained. The interest rate is for the lending and deposit rates. And general ledger, this is another big session we have to take. Mainly this covers like whenever I am giving a deposit or whenever I'm taking a deposit and I have maintaining the current account, savings account, I can give I can create multiple accounts for multiple customers, but all their balances will be reporting to one particular GL. When I take a particular product, in savings product, all savings product may report to one particular GL. Credit and debit balances, everything may report to one particular GL. So on any particular day, if I want to know what is the total savings account balance and total deposit balance, total loan balance, instead of taking the sum of all the accounts, I can go to one particular GL, take the balance. So that will report, that will say what is the current outstanding or current balance at the bank level. This MIS is nothing but mainly used for reporting purpose. So whenever I do a transaction or whenever a loan is created, whenever current account, savings account deposit created, there they will have a reporting parameters like this belongs to retail or corporate. Even under the retail also there may be multiple like student, affluent customer, private customer, gold customer. So banks can have different MAs for reporting purpose. I may have 100 million savings account, but what is the breakup of 100 million? How many, which segment is having the more? So that data, if we want, then this MIS details will be used. Next thing is the product setup. The product setup is what, as a functional consultant or business consultant, we will be working more on this once the product setup is, once the core banking system is up and running. So this will be a regular maintenance activity will come, whereas CASA, current account, savings account product will be there, where business team might come up with a new product with new features or innovative product, innovative savings type of thing. So for that, we may have to create new product. Underlying that, we will have some interest product attached. So sometimes like in savings account, if I maintain more than 10,000, I will give a different rate. If I maintain more than 10 lakh, I will give a different rate. So like that with the slabs and all, they may come. For that, interest product will be attached. And then next is the loan product, like personal loan, education loan, housing loan, and tomorrow they might come up with another variant in the same personal loans. So those things will come under the loan product. So these things are all called the product setup. And then next is the charges and commission setup. As I told you beginning, like how banks earn income through charges and commission. Charges meaning like whenever a customer goes to the branch for any deposit or withdrawal, they can charge the customer as per the central bank regulation. Like if customer comes to the branch more than 5 times in a month, then I will charge some amount. Or if customer tries to withdraw from other than home branch, then I can charge some fixed amount or percentage of the transaction amount or whatever thing. And commission is mainly for the, like when you go for exchange rate conversion, you are paying with foreign currency, trying to convert to a local currency. That time they can apply a commission percentage basis. Okay. And then finally, payment products. Payment products is nothing but, you want to transfer money from your current account or savings account to other bank accounts and or international transactions. So for that, payment product will come into picture. Or take a case like you want to make an utility payment. So those things and all comes under payment. So these things will be the common setup in a bank to run. So these are the at least minimum setup will be there to run a bank. Any bank you will see this kind of setup. On top of that, you may have some other modules like money market, forex, trade services. That is in at the next level of stages. Like now we are trying to cover at the very basic level to give the intro about the banking system. So I hope this is very minimal to cover. So that's why I'm not covering other modules in detail. I'm covering only the basic modules. Now let us go to customer information. Customer information file is what usually we say. Sometimes we, in a short form, it is called CIF or SIS. In many of the banks, they use either CIF or SIS. So these are the two terminologies commonly used. Okay, when it comes customer, we have to know what kind of customer he is, whether he is an individual or personal customer, personal banking customer, or corporate. Corporate in the sense like a big company comes and trying to maintain an account. So where there is no single individual is whole responsible. There are multiple people, multiple stakeholders will be there, directors, executives. So those information we need to capture. And third is a bank type, like I'm having a bank in India and some other bank from US or Europe. They want to do the payments and transactions. So we create a customer for that bank. So that is called bank type customers. So first thing we'll know this and what is the different types of customers, individual, corporate, and bank. And then next comes basic information about the customer. Like if it is an individual customer, we have to take care about the nationality, address, what is the date of birth, that comes under the personal information. But this previous like which country, what is the nationality, what is the exposure, and other like address, what is the default communication with the customer. So those information will be there. And the next thing is the customer classification. Customer classification meaning, as I told you, within the individual itself, I may have multiple classification, like personal banking customer, or gold customer, or private banking customer, or student, agriculture. So that kind of classification, further classification is there, because based on the classification, they will offer different charges. Basically, the private banking customers are high net worth individuals who are having more deposit in the bank, or more balance in the bank, who contributes more income to the bank. So for them, the bank always want to give the less charge and more convenience. And then next is the gold customers. In some banks, we have seen, below high net worth individual, but more than the normal customer who maintains a very good balance, that kind of thing. So that comes, that is nothing but a customer classification. And then third thing is having the personal information. This is like a sensitive information. In any bank, they will always try to expose to only some certain people, because this information is because everybody know, like password protection, everything happens with the sensitive information. So every bank is more particular about this information. And because somebody gets the mobile number of the customer, then somebody will sell it to others for some other reason. So it is not very sensitive information. But however, it will be stored, it will be captured by the bank, and it will be stored in a very restricted with a restricted access. And then another thing is KYC project to know your customer. In this, you bank will capture what is your financial strength, meaning how you are making an impact, and how many transactions you make per time, and what is the source of income. What will be the maximum revenue that you will be generating in a year. So if a salaried person is there who is earning 1 lakh per year, so his turnover might come to 20 lakhs or 25 lakhs. If he exceeds that 20 or 25 lakhs, bank may put a block and saying that you have you are evaluated for a turnover of only 20 lakhs, but you are making more than 20 lakhs. Give the reason for excess turnover. Sometimes customer may take a loan, so that can go to, that can exceed the turnover. Otherwise, if he is doing some other business, some other side business, and he is getting that income, that he has to share it with the bank, because bank is supposed to know all the information, because this has to be exposed to the government to avoid the money laundering and other fraud cases. And then FATCA is another term used. This is mainly for US tax details, because US has uh, uh, put the restriction, or they're given some mandate to all the government, saying like, whoever having account with you, if they are tax payable in US, you have to share the information, is what the some mandate. So based on that, for FATCA also they capture some information. If you are if customer is tax payable in US, then some additional information has to be shared. So that information is captured under FATCA. So this is the basic about customer data which is captured in the core banking system. And then last is this CRS information. This is mainly used for tax reporting purpose. Every country has a different way of capturing the information. It may vary for country to country. This is mainly used for tax reporting purpose. And then last is the signature capturing. When a customer is onboarded, then we capture the customer signature images. So if customer comes with a check or some other letter, then we have to validate by seeing the signature only. So this information also captured as an image. So when a customer comes and gives the request, that signature is validated by the user manually and verified. Nowadays there are software also available, and that depends upon the bank to implement. Next thing is current account and savings account. In short form, they call it as CASA. Now, you are having an account at the bank, then, but a bank is classifying the current account and savings account. What is the major difference between the savings account, current account? We'll see. The purpose. Okay. In savings account, the term itself says it's meant for saving, meaning you will not do more withdrawal or more deposit. Once you deposit, you will do only very limited withdrawal. So the nature of transaction is expected as very less in a month, 10 or 20 like that. Whereas in current account, this is meant for business people, where in a day, there may be a minimum of 10 to 20 transactions, 100 transactions, 1,000 transactions, where big corporate, they make 1,000 transactions also. Take a case like Amazon in India. How many transactions might be happening? Or you go to any shop, any retail shop, we are doing a card payment, and also how many transactions they may receive. So that comes under current account. And then, as I mentioned, savings account is meant for salaried person or individual people who does not make more transactions, and meant for savings purpose. And current account is meant for business people. And for savings account, there will be a minimum amount also will be there, but very limited, like 3,000, 2,000 for students, zero balance account, and that will be there. Current account, it depends on the bank. It may vary. They always ensure that at least maintain 50,000, 1 lakh. So based on the package they take, banks can impose minimal amount for the rate. And then comes with interest rate. It based on the RBI regulation or based on the central bank regulation. Every bank is supposed to pay the minimum interest, and some banks may come up with a higher interest rate to attract more customers. And for current account, normally there won't be any interest because of the nature of because in savings account, at least in a month, we know, if I have 1,000 accounts, minimum this much balance will be there. In current account, yeah, amount will be more, but there is always fluctuation will be more. Today I will have 10 lakh or 10 million, and tomorrow it can go to 20 million, and next day it may come to 5 million like that. But in savings account, the pattern will not change much. So that's why using that money they are lending to the customer. So the bank has to share the interest with the savings account. And overdraft meaning, if I have a balance, then only I can withdraw. But the bank can come up with the arrangement with saying limit. I can allow you to withdraw up to certain amount even if you don't have a balance. So that is called overdraft, going above your balance. available balance. That is called overdraft. In typically savings account, they don't allow. Current account, it is allowed based on the relationship and exposure for the bank. And the savings account, some banks, yes, salaried account also they allow. That depends on the bank type. And then we will see what are some important terms. Important terms in these accounts. Dormant. I don't know whether you might have come up this dormant meaning like in a year if you don't do any financial transaction. Some for this is as per the regulation it goes actually. Either 365 days or 2 year or something like that. In within a year, if you don't make any financial transaction, then that account is considered as a dormant. Once it becomes dormant, credit, some banks they say credit also not allowed. That is as per the central bank regulation. Credit or debit is not allowed. In order to activate it, customer has to visit the branch, give the request letter, and then they can activate it. Or on let's say 365 days is the dormant, and 365th day, if they make any transaction, then again it will be active for another 1 year. So like that, at least one credit has to come. Customer initiated transaction. There's a term like customer initiated or bank initiated. Bank initiated charges are not considered as a financial transaction done by the customer, but there is an activity. There is a difference between bank initiated and the customer initiated transaction. Mainly bank considers the customer initiated transactions for the activity. Customer has to make some transaction, either credit from other banks or credit initiated by the customer or debit initiated by the customer. So this makes customer account as active. Second thing is no debit. This no debit, a bank can apply in previous slide we have seen KYC. Customer is exceeding some turnover or customer has not satisfied some regulatory requirement, has not submitted some document, then they can put a no debit, which means customer can get a credit, but he cannot make any debit. And then another flag is that no credit. This is in case customer identified as some fraud or I want to block any credit comes into the account that he is exceeding the turnover. So bank can enable these two. And then third option is freeze. Freeze is nothing but combination of these two. Where and even bank initiated debit also is not possible. And then fourth is block. So there is a slight difference between the freeze and block. Block is for the internal defense. Freeze is like you might have come up in the news channels or anything. Customer account is frozen due to some regulatory activity and all those things. And then next thing is available balance. You can see another thing is current balance. There is a difference between available balance and current balance. Okay, and the main difference is current balance is something you are currently you are having a fund in your account. Available balance is nothing but how much you can withdraw from that fund. So let's say you have 10,000 in your account, and due to the loan, upcoming EMI, or due to some other pending charges, bank may block some amount, thousand, let's say 1,000 rupees is blocked. So remaining 9,000 only is available for withdrawal. So 10,000 is your current balance in your account, but 1,000 is blocked. So only 9,000 is available for withdrawal. So this is the difference between available balance and current balance. These are one of the common terms we have to be clear in the banking. If you are working on the banking system, banking domain, these terms you have to be very familiar. And the next thing comes is uncollected funds. This usually comes for the credit. Whenever check comes into the account, uh, check transactions may come with the future validated or it will show in the statement, but balance will not include that fund because it is not yet available to the customer for withdrawal. It might come in the end of day or next day or something like that. And then the next thing comes block defense. As I told you earlier, if any some charges pending or you made some credit card transaction which is not settled, so they just block the amount and then later it made clear. by posting the transaction, or without posting the transaction, they can release the fund, or you are supposed to make some payments, some check or loan payment. For that, they may block the amount. So that fund will be showing in the current balance, but it will not show in the available balance. And then another thing is value date posting. This, as a retail customer, we may not come across this particular term, but it's better to know, because if you are working in the banking domain, you have to know this. This is like whenever you have seen the some check postings, you are writing the check date, right? So based on the check date, a transaction get posted. So there are two things, like transaction date and the value date. Transaction date is when the transaction is initiated. Value date is nothing but as of which date this balance has to be available, or this comes into effect. This is at the high level, I'm telling you now. Again, when we go to the next session or some other session, we'll see in detail. So just to recap on the current account, savings account, first we have seen, what are the types of, what are the different difference between the savings account and current account, what is the purpose, and what is the interest rate, and we have seen the overdraft and some important terms in the current account and savings account model. Next, we will see about credit card or debit card payment flow. As a retail customer, we may come across with this facility. We are using the card with chip embedded on it, and the card is having a 16-digit number. This is mainly given by two institutions in the world as for the international transaction. One is Visa and another Mastercard. And in India, there is another player, RuPay. And likewise, in China and some other countries, they have their own national parties. They also issue a card for the national within the country. But internationally, Visa and Mastercard is what mostly used. All your credit cards, you might get it in the Visa or Mastercard. Debit cards in India, it comes mostly nowadays, it comes with RuPay. Okay, that information, okay, at the end of session, you will come to know, why RuPay is introduced, why they are avoiding Visa and Mastercard. That we'll see it later. But as a customer, as a account holder, if I'm having a current account or savings account, the bank has given a debit card, we will see how the transaction gets processed. So using the debit card, I can use the debit card in the POS machine. This is nothing but point of sale machine, which is available in the stores. Physically, you go and swipe it. And then another thing is e-commerce websites, where you give your debit card details with the CVV PIN, and after OTP, you clear the payment. You make the payments. So these two things. Once you swipe it, or once you give the information, so both takes your card information and does the preliminary validation, and then whatever the card information and PIN, whatever is entered, it has to be validated. So it will go to the payment processor, and then your card is issued by your bank, which is issued the card. So the bank which is issued the card has to authorize your transaction. That is called issuing bank. And then this is called acquirer bank. Acquirer bank is nothing but this particular merchant, he is having account with bank A. This is acquirer bank. Let's say this is ICICI Bank and this is HDFC Bank. Issuing bank, you are having account with HDFC, and your merchant, he is having account with ICICI. So because the transaction is initiated by the merchant, it goes to the acquirer bank, ICICI Bank. ICICI Bank contacts the HDFC Bank. Then all these things happens through Mastercard or Visa card, because they only issued the card. So they come into picture. They go and validate, because this issuance bank, HDFC Bank, only knows what is my balance and am I eligible for debiting the allowing the transaction, balance check and everything, whether any freeze is there, block is there, no debit, all checks are done. And then finally they say, okay, this customer is having the balance, I am approving the transaction. And then it comes back to the ICICI Bank, which is Acquirer Bank. And then this bank says the merchant, HDFC Bank has approved the transaction. And now I will credit the funds to your account. You can proceed with the payment. The payment is successful, so you can give the goods to the customer. Now, as a customer, my transaction is approved. Immediately, my HDFC Bank sends a message to me, you have done a transaction. And then I'm happy, I came back. Now, if I go and see my account, the transaction will not reflect immediately. It will show as a blocked amount only. Okay, when this gets clear, there is internationally there is an agreement like within 21 days, this Acquirer Bank has to send a settlement file to the issuing bank. ICICI Bank has to send the settlement file to issuing bank. This is done through the network that is called Visa or MasterCard. So this particular system, because all the transactions happened through this Visa or MasterCard. So this guy makes an arrangement to make a settlement. So he sends the message to HDFC Bank. Yesterday there was a transaction, you approved it. Now you do one thing, you debit the customer, whatever the blocked amount, remove the block, post the transaction and that account, and credit my account. And then Visa says, yesterday I received a payment request from you. I got the okay from HDFC. Now you debit my account and credit your account, credit the merchant account. So this is how the settlement happens. So as a customer, I made the payment through the POS machine at the merchant side. So the merchant contacts his bank, which is ICICI Bank, is an Acquirer Bank, and then he sends the message to the HDFC Bank through the network, and then HDFC Bank checks my balance and whether a transaction can be allowed or not. If everything is fine, then he says okay. So based on that, the payment successful. Once the payment is successful, then the Visa card or MasterCard, they arrangement for the settlement file. So this is how the broadly for high level understanding I'm telling. When we go into detail, there may be more information. There will be a slight change based on the current architecture, because every day this is getting evolved. Nowadays, we are seeing in India we have UPI payments, where that UPI payments mainly works for the current account, savings account. That doesn't work for the credit card. That changes are coming up now. Okay, this is a happy path scenario. In case if fund is not there, then this guy gives the reject payment, and then suppose he missed sending the request, then only block is removed but transaction is not posted. These are all the failure scenarios or exception scenarios that there is no need to discuss at this point of time, because first we want to understand how this works at the high level. Okay, and this is the end of session. If you have any question, please post it in the comment section. I can give the response over there, or I can arrange for another training. Thanks.